It just so happened I actually did a market overview, so I'm very happy to share, what my viewpoints of the overall market. Okay, so this is what I did here. I did just pick up some numbers. I picked up some numbers and of course from some articles. Okay, the long story short is this: I'm actually quite positive for second half, especially after what I hear from the PM today. So it seems that if you ask me, the hidden message is, let's come and just ramp up the economy. Don't wait for the virus to be over. That's not going to happen. Let's start doing what we need to do. So I thought, from a business or investment perspective, it's actually quite good. Okay, so some actual numbers or article, like for example, this is the one which was quite significant to me. Still possible for Singapore economy to grow 6% or more this year. So this 6% is actually quite significant. Why 6% is significant? Basically, from a GDP perspective, we are talking about full recovery from last year. So last year, if I remember the numbers correctly, last year as a whole, our economy dropped by 5 to 6%. Okay, 2020. So this year we actually rebound back fully. So of course, this rebound is actually not balanced. There are still certain industries which obviously, like your airline, tourism, is going to be bad. But there are other industries that actually rebound a lot faster. So economy as a whole, we're actually going back up, okay, back to full recovery. So this is actually quite significant. So again, based on what I hear today, it's actually quite encouraging. So I can't remember, is it the Minister Gan or PM actually mentioned that? So this month, the impact to the economy, this month we sort of have a little lockdown. So the impact to the economy is actually quite marginal. That's what they actually say. So of course, your some restaurants got hit, but economy as a whole is actually still doing very well. Okay, as you know, I actually we have to look at the global news. We believe that the stock market will actually follow global economy more closely. This is what I pick up some of the more significant news to me. So US, they are easing restrictions. EU, they actually agree to reopen the borders. So again, long story short, economy is opening up. Very good for the economy. And if you actually go into the actual statistical numbers, also paint a very bright story. PMI, hopefully you all can remember. Okay, so just to have a little test, just make sure everyone can remember. Now, PMI more than 50 is good or no good? PMI more than 50 is good. Don't mind, just help me put in the chat. Okay, thank you so much. So PMI more than 50 is good. It means that it's expansionary. Okay, the procurement managers are buying more raw materials as compared to last month. So you can see that this is happening for Singapore for almost coming 1 year already. It has been on the expansionary mode for almost 1 year. This is the 50 mark. Very good. So things are moving very well. US, okay, US is actually tremendous. It's actually very good performance. This is the 50 mark. So we are looking at the US PMI of above 60. That means they are really ramping up. Okay, they are really ramping up. So same for Euro, also above 50, really ramping up. So all this means that the economy is actually slowly getting back. So as per, it matches very well with the articles. So with EU opening up, more travel, US lifting out restrictions, you see a lot more economic activities, things are getting back. So what is actually very significant to me here is this. Okay, basically I see a mindset shift now. Okay, so in the past, we're always thinking of, okay, let's wait for the COVID to be over, then we do this. Let's wait for COVID to be over, then we open up. Let's wait for COVID to over, then we actually start running our business. Okay, so I think now at this juncture, there is a very clear mindset shift. Again, especially after what PM said today, it's like, okay, look, COVID is actually going to stay. So this is UK's report. You can see that UK, actually, you are still talking about every day 3,000 people getting the virus, tested positively for the virus. 3,000 is not a small number. Okay, it's not a small number, 3,000. So it's not like US, there are no people getting COVID, or UK people. No, it's just that we have changed our mind already. It's like, okay, got COVID, so what? Life goes on. We still have to push on, or at least this is from my perspective. So if you ask me, it's a bit like, there's one period there was like terrorist attack. So at first, when the terrorist attack, I can't remember, I think in London, in London and in US, of course, at first there was fear, or in France, there was fear. Then after that, people like don't dare to go out, don't dare to fly, so on and so forth. But after a while, okay, the terrorist threat is still there. But after a while, people say, okay, I cannot live in fear. Okay, I just have to make sure life goes on. So I think this mindset shift is actually very important. And people are just like, okay, let's not wait anymore. Let's push the economy forward. So I am very positive with what I'm saying. Okay, basically that's my point here. Okay, so this is my summary. Global economy is recovering well. The threat of COVID disrupting the economy has reduced. It appears that the world is ready to coexist with the virus, and the world is ready for a new normal. So this is my observation, or my conclusion from all the various observations. Now, the other thing that actually caught my attention is this. So, of course, we all know that during this COVID period, there is a huge increase in money supply. Everywhere in the world, including Singapore, is printing money, giving away money. So this period, government just give away another $800 million. So too bad. I received nothing again. That's quite sad. So anyway, US has been printing a lot of money. Someone just informed me that I think last Friday, maybe some of you can actually help. Biden again announced that I don't know how much more money he's actually going to print. I didn't get to have the article. I thought it was just last Friday. So of course, if anybody can have the article, maybe can help to share. So a lot more money. And what I caught is this. This is actually an interview with MAS CEO or MD. They call it MD, yeah. MAS MD, Mr. Menon. So he is expecting huge and volatile international capital flow, faced with large capital flows. So he's actually expecting a lot of all this money supply is coming into Singapore. A lot of money is coming to Singapore. Of course, for him, he sees it as an issue, as a problem. So which is going to be on a longer term perspective. Okay, but what it also means is that there is going to be asset inflation. Okay, luxury goods, things are going to be more expensive. And this is from last Friday, if I'm not wrong. Somehow Singapore are attracting all the super rich as the world's safest haven. So money is sloshing around Singapore like never before. Family office, Bentley sales, real estate prices are booming. So yes, apparently my real estate partner, he's actually now, of course not all the time, he has actually a few experience of just selling property in Singapore via Zoom. So can you imagine people after buy property via Zoom? It's like go to Lazada and buy a property. Wow. I wish I'm there soon, but this is actually happening. So money coming to Singapore. So the immediate, the very direct impact, okay, thank you so much, William. 6 trillion budget to boost. Thank you so much. Appreciate that. So you are seeing so much more money. And money is coming into Singapore. So what it will impact is all the luxury item, the asset sales. So your property, your luxury goods, as per what we talk about. Okay, again, I don't know whether anyone buy voucher. This one is hearsay. I cannot afford it. They were saying if you actually want to buy a Rolex today, you probably have to wait on wait list. I'm not sure whether it's true or not. Maybe someone can help me to vouch that. I'm still don't have watch. Where I'm wearing my Casio, so I don't know. But someone was telling me if you want to buy Rolex, you actually have to be on the wait list. Property prices and of course stocks. Okay, stocks. Some money will actually come to stocks. So when you have family offices coming in, so and so forth. So the Chinese is also liberating. So now, I think every Chinese, they are allowed every year to invest about 50,000. I can't remember, is it US or renminbi? They basically are allowed to invest some money outside of China. So obviously, thank you so much. US 50K, thank you so much. US 50K outside of China. So of course, not all will come to Singapore, but can you imagine so many Chinese? Only is 1% of the money. So it will actually cause a lot of asset inflation. So again, all this, at least for the short term, I think it's good for the market, good for the stock market, good for the real estate market. Yeah, long term, it may cause an inflation issue lah. Okay, definitely. So the good thing is that in Singapore, actually our what they call it, the core inflation is still maintained very well. So our normal goods, okay, our food court prices, our char kway teow or chicken rice, yeah, the prices won't be so affected. So thanks to our government, they actually split the segment very well. But yes, if you are actually going for luxury goods, if you're actually going for luxury goods, we will have this pressure. So I think there is a pressure for the luxury prices to go up. So it actually makes investment more and more important. Okay, so I won't be surprised next time if you actually want to buy, maybe you want to buy a Toyota, Suzuki, still okay. But if you actually want to buy the BMWs, Mercedes, the higher class one, then I believe it's actually going to be more expensive. Sorry, maybe now Mercedes also not considered luxury. So like, I don't know, if you want to buy like Bentley, Porsche, very likely the prices will keep increasing. Restaurant prices, the Michelin stars, yes, so that are the things that will keep going up. Okay, so again, let's go in terms of actual numbers. We keep saying our money supply increase, actually increased by how much? So for Singapore, it actually went up by about 14%, as you can see here. Okay, 14, so this is 2020. Okay, about 1 year ago, went up by about 14%. So if you actually just want to put it crudely, that means everything should actually go up by about 14%, given that there's 14% more money. Okay, so of course, different item will have different price increase, but you put it crudely, now you got 40% more money chasing the same amount of goods, so obviously the goods will generally increase by 14%. So this is how I actually derive my 3,006. So I believe now the fair value for STI is actually 3,600. Okay, why is that so? Because pre-COVID, STI is hovering about 3,280. And if you actually add another 14% increase to 3,280, so you work out about 3,006. So if you ask me, I believe 3,006 is the fair value for STI. When it's going to hit, I don't know. I got a feeling it's not this year, maybe next year. Okay, but prior to hitting 3,006, I'm actually still quite confident in investing. So that's my point here. If you actually look at US and Europe, okay, US actually booming 25%. 25%. Okay. And Europe, okay, not so bad, also 15%. So yeah, so imagine some of this money flowing to Singapore, that's actually quite a bit. Okay, so conclusion, so economy will be on track for recovery despite the fight with COVID is still on. So more money supply globally. Singapore is still attracting capital inflows. And what will happen to our stock market? I think my position is quite clear. I do expect some of this money will flow into the market, actually pushing the prices up.